Well, what's going on, team? It looks like this market, tougher than normal? Yes, of course, tougher than normal stock market that we're dealing with here. And it looks like I was right on one number, might have been wrong on another. Find out why on Stock Market Movers today. And of course, we got our guest today, Brian Seay from CFA, founding partner of the Capital Stewards. Excited to talk to him about the FOMC. And of course, we'll take a look at these numbers. How does that affect us down the line? And what's the bull case? We'll ask Brian coming up next. Stay right here, team. Hit the thumbs up. Are you guys excited for another round of Stock Market Movers? There are three ways to make a living in this business: be first, be smarter, or cheat. I can't help you cheat, but I can give you the informational edge to help you succeed in the markets. Welcome to Stock Market Movers. All the market moving headlines and expert opinions every day. They say money is the oxygen of capitalism, and I want to breathe more than any man alive. Good afternoon, traders. How we doing in this market? It isn't easy by any means, and that's what I really wanted to start off with. It's tough markets to deal with when you're dealing with this. The notion right now is that good news is bad news. Bad news is good news. So, of course, this always takes a little bit of deciphering when the numbers or specific catalysts hit the tape, right? And there's always going to be kind of a moment where investors right now are kind of digesting what has come out, and then boom, we start getting reactions. Well, today I started to lean even on the bullish camp. Well, why did I start leaning on the bullish camp? Was because of unemployment numbers coming in at 3.7 versus 3.6 expected. Of course, this also shows more of a lift from the prior number, right? 3.5 to 3.7. This is good news for what the Fed mandate is doing, right? At the end of the day, they're trying to kind of destroy the unemployment numbers right here and kind of get the economy in check so that they can go ahead and finally get inflation in check. Well, it looks like I might have confused the number this morning on the non-farm payroll. Like always, we want to admit when we're wrong. It seems like I might have been wrong on this number, but I'll tell you why I was thinking about it this way, right? And so that you guys can understand my thinking. So non-farm payrolls, right, are jobs added, right? And in my eyes, first, we need to first add the positions that are empty, that are open, right? Let's say if companies are trying to hire for a certain position, but they just can't find the workers that are needed for that position. This is how I've been looking at it. I think they first need to fill in those spots. And once they fill in those spots, then from that point, the job openings go down. And from that point, we could start seeing unemployment go up. Because if job openings are still out there, what ends up happening, and I feel like this is really has to do with more of how the data is taken. What ends up happening to me is you're still getting people laid off, but they're finding almost immediate work in the open market because there's a lot of open jobs. And so they don't show up in the unemployment rate. And so this is why I'm trying to focus on what's going on here with the unemployment data. Could it be that it's the way that the data is being taken? Yes, it very much could be. But one thing's for certain, that if you looked at the non-farm payrolls, some people stated this as a better than expected number than what I thought it was, which was a higher number, meaning that we're adding more jobs. Of course, once we fill in the jobs, I feel the unemployment will go higher. But it might have been my understanding that was wrong here. You got to always be willing to admit it. And there's one thing that I will never do, and that's not be willing to admit when I was wrong. Seems like I had the unemployment idea right, but maybe the non-farm payrolls I got wrong. We'll just have to wait and see. Let's get into those numbers. Of course, unemployment, we just talked about that, so we can get through there. We can start talking about what I see out in the market right now. Let's take a look at the SPY, and that's what I'm here for. It looks like I see you guys joining in. Jesse, Blind, Miss Whitehorse. It's good to see you guys in the chat. All right, let's go towards the charts here. Let's take a look at the SPY overall, and you can see here in the morning, we started holding kind of the resistance. We looked to get that little pop back. We pulled back into the zone, started holding that 374.79 as a resistance. And then right here around 12 p.m., we started coming right back through that level. That's when I started getting a little bit concerned because we were looking for the nice breakout above this level with this number, giving the background in the bull run, right? The bull case. The bull case lately has been on an outlook that the Fed would slow down the pace of the hike rates and, of course, lean towards eventually pausing. Well, I thought that the data today gave those bulls the ammo that they needed to really start, trying to push towards the upside. It still hasn't broken to the downside. So to me, as long as it can hold 369.17, we're still not looking too bad. And maybe it's just 369 overall, but that's the level that I'll be watching to flip back to the bear side. Right now, I'm still in the bull camp as long as the support isn't broken. And really, this is more short term in the quarter. I could even think that we could have a rally in the quarter and eventually come back down here. We just need to keep watch on the market. All right, looks like it's hot in Michigan, 71 out there. Is it cold? Well, I'll tell you what, out here it's like in the 70s, so it's not bad at all. Maybe the high 60s, but fall weather, real fall weather, at least for me, and it's November, so not mad about that. I know in Colorado, they're already getting the snow, so hey, missing out on a little bit of the snow this year, not going to be too upset about that. Now, China stocks jumping on rumors of zero COVID reconsideration. And now let's take a look at some of these Chinese EVs today as they're getting some lift. You see NIO here. Let's go to the 15-minute chart. You guys can see the bullish action here. XPEV was up big in the pre-market, now starting to come down. We'll see what happens on these. In overall outlook, I don't know if I can trust any news from China right now. I don't trust them in their media. I don't trust their government. I just don't trust China at all. And so at this point, I'm not going to say that this can hold. I would be more leaning that this is kind of more false news, that they're just trying to lean the stocks back up. But to each his case, you guys make your own investment decision here. In China, I would be a little bit careful. Now, the EEM has been doing a little bit better with this mention, right? This could be an area that maybe you're looking to have risk and return. Now, that I don't see too bad because maybe you're risking into this 34.50 area here on EEM. You're only really risking about 50 cents there on the name, maybe $1.50 there on the name. That's not too bad. We're talking about, maybe a 4 or 5% risk for a move back if you really feel this is going to come back. But I'd be a little bit careful because everything can change in China. Snowing in Denver? Yeah, man, it happens quickly there. All right, let's go towards some other names in the on the chart today. We're going to take a look at a lot of earning stocks. So let's start rolling through there. And later today, we'll get into our interviews. So let's get towards PayPal and see how PayPal performed on the day. Of course, I'm going to try to make sure that we go through all the earning stocks that we might have missed in pre-market prep. So I'm going to really quickly roll through these first couple, and then we'll get into other ones that we can take deeper conversations. And yes, easy. I did see that huge accident in Colorado, and prayers out there for everybody that if they are injured, they're healing up and no loss of life. But I will tell you that definitely be careful out there in the snow, guys, especially in the snow on the highways. I, as one person that lived in Colorado for many years now, have seen it, that people get really confident with their driving abilities in snow. And seeing as I'm one of those people that have, pushed my limits, tested a lot of things, even done a little drifting in my days. I can tell you, snow is one area that I really take it easy on and try my best to keep the space. But we'll get out of that topic. I see you, Easy. Shout out to the people, of course, in Colorado. Stay safe out there and be careful with the snow. All right, let's go towards this stock. PayPal up first. Let's get towards it. PayPal and Square, we're going to do them together. So let's go to PayPal here. It's continuing to get hit. And I'm so glad I warned in this company in October of kind of 2021. And you guys can see since then, this stock has just been destroyed. And I think you'll continue to see this stock destroyed. I think it can continue to take the next leg lower, even through this 70 price point now. So I'll be watching PayPal to see when this actually turns around. But this has been a company that some people have been trying to call this whole way down. And in my eyes, in those situations, what do you wait for? You wait to really start seeing monthly charts that are showing you the change in trend. Right now, it's saying I got to go. All right, you guys can see the numbers down there. They did beat on EPS and beat on sales. But why did they go down a lot? Well, Square reported right before them. But also look at Square. Now you're starting to see some sideways action, but really haven't seen a change in trend in the monthlies, even though not a bad earnings report today. And I will start calling towards support that you guys can keep watch. Really, I would say around 53 is the important level to watch here. If 53s can hold, then maybe Square starts getting back up. But if it tests 53 again, I think you get to the next leg and you can go down to the $40 mark, where I used to watch this stock. I used to watch this stock in 2018, and now we're coming back to those levels. Just shows you that sometimes you got to take profits and moves. And this is one conversation that I want to have with longer term traders, and I'm going to start asking them and analysts out there. Well, if you went through these moves where you let the stock pull back all the way from the highs down here back towards, let's say, 2018 numbers, is that an incorrect move in managing the position? Should you be taking profits when you get to a certain level, especially when we're talking long term? Of course, this is more strategy to play, so there's no one answer, but it's something that I keep in mind. All right, Square's numbers coming in here. EPS at 42 cents, beating the 24-cent estimate. Sales at 4.51 billion, beating the 4.5 billion estimate. So not a bad numbers here on block. And you guys can see, let's go towards the intraday action. It's kind of holding the pullbacks right now. We'll see if it eventually breaks through 63.50 or pulls back towards that 53. We'll see what happens there in block. Catching up with the chat. What's going on out there? It looks like we got the blind trader, Easy Mike. Motor oil slicks the road. Yes. Got to be careful out there, guys. Definitely Mo Herbert. The best drivers know when to stay home. That is 100%. And in the snow, that's usually what I try to do. Stay my butt home. The blind trader, what's going on out there? I just hope you're not on the roads. Anything with high PE smoked. Twillo, Net, Team. When they miss, they get crushed. Crocs versus 8 PE and Cat. Yeah, low PE still doing well. We'll take a look. All right, let's get into the action here. Let's go running through Coinbase. Not really a stock that I'm a big bull on, but we can take a look at the price action today. Still fading off here. It did get a little bit of a pop there, but in the long run, I'm still majorly concerned about Coin. They were still able to add users, but in the long run, will this change? If Bitcoin's price keeps coming down, will they start losing users here? Is something to keep an eye out. They did have 8.5 million monthly transactions users, and they're down 500,000 in the second quarter. So look to see if this starts being that they're losing millions of customers. And if that happens, well, you got to get out while the getting's good. And in my eyes, Coin eventually is even a half from here. I think we eventually get down towards like $30. And that's where I think you'll start making more sense in Coinbase to kind of hang out in. And look at Hood. Hood is another one that I expect to do the same thing. Retrace back towards the lows. Maybe eventually cut 8. Maybe go to 5. Not a stock that I want to be in Of course, it's not the environment right now. We would need a bullish environment in crypto. And I think that we're in winter. Starbucks doing well today, getting some lift. Of course, their numbers were not bad at all. Starbucks is a company that, I will be honest, I probably have gotten wrong. And that's what it's about. Sometimes you're not going to be right all the time. But one thing that I do, I call it how I see it. Starbucks EPS at 81 cents, beating the 72-cent estimate. Sales at 8.41 billion, beating the 8.31 billion estimate. They do now surpass 6,000 stores in China and pushing to a global store count record of 35,711 stores. To me, I think this is a huge exposure there for Starbucks, especially if we're going into a global recession. We've already talked about how, yes, here in the US, we're maybe getting through the recession at a better pace and, consumers have more money. But if we are going towards a global recession, how will Starbucks do in that environment? How will their international sales do? Well, right now it's up 11% in the US and double digits internationally, excluding China. Will this soon change? Well, let's keep going. Let's go towards the next one. And you called it out, Jay, in the chat. Let's go to Twilio. It's still getting hit. Let's talk about their numbers. EPS coming in at a loss of 27 cents, beating the loss of 36-cent estimate. Sales at 983 million, beating the 972 million estimate. Twilio sees Q4 adjusted EPS at 11 cents to 6-cent loss in the quarter in Q4. And this was against their loss estimate of 12 cents. So what are they doing here? They're bringing the estimate down a little bit, but it's bringing it up in the good sense because you're going closer towards that break even. So we'll see if Twilio can actually get back to making money. It just shows me here that this company has definitely had their whole business kind of turn around on a dime. A lot of this could have been, of course, because this company is kind of more B2B. A lot of companies kind of cutting them out. So this is something to keep watch as we're finally going back into pricings where I used to watch this stuff, which was back in kind of the early 2018s. So Twilio is going to get to a point where I feel that it is a company that maybe we could take a shot on. But right now, it does not look like it's the time. The question will be, what will be that pricing? And what I will do is try to rely on that opening IPO price. Probably once we get down towards, we got an opening of 24. Maybe that's where we head towards. But right now, it's not looking like a chart you want to be in. Carvana also coming out with some earnings. Let's go to their earnings. Of course, our Carvana is one of those companies that I've been saying, I just don't think they're going to be able to survive this kind of environment. But let's talk about it. Carvana's EPS coming in here at a loss of $2.67, missing the loss of $1.95 estimate. Sales of 3.39 billion, missing the 3.78 billion estimate. Needham maintaining buy on Carvana, lowering price target to $20. But not everybody doing this. Some people really starting to call the turnaround in Carvana. So you guys got to take a look at the numbers. On Friday, Morgan Stanley, Adam Jones did pull the firm's ratings and price target and even gave a kind of like a really bad bear case, right? And I think this is important to keep your eyes on what happens with this company. But I think in the long run, you might see Carvana go under. And there's not many companies that I've predicted this about, but I'm just going to stay on that because right now, I just don't see them getting through this environment. Of course, rising interest rates are going to continue to rise and hit the used car departments. And of course, what is going to happen? Demand destruction. Who wants to be buying a used car with a 12% interest rate or 13% interest rate? I know I would run the other way, but hey, to each his own. All right, getting out of Carvana, another disaster stock on the day is DraftKings. Look at DraftKings getting destroyed today and keeps getting hit. DraftKings missed on their EPS by 4 cents. It wasn't much, but it was at a loss at $1. And so the estimates here of 502 million beating the 437.23 million estimate shows that at least they're doing good in sales. It really doesn't look bad in sales when you increase in the third quarter revenue 136% to 502 million. Now, where we start to, really kind of have concerns is their spending, right? And that's why they're not profitable right now. They're doing a lot on customer acquisition. I think this is what you need to keep watch, but also we're not in the environment right now where we really care more about getting those customers than being profitable. In this case, in this environment, we're looking for some profitability. Cash flow is king right now. And as you guys can see in DraftKings, it's negative cash flow. We're losing money in DraftKings right now. So this is the important thing to keep watch. Of course, they're making revenues, but they're spending more than they need to be. And the big thing there is just their strategy. This is their goal. Their goal is to get the majority of the market share and then worry about profitability. We'll just see if that focus comes at what price, right? What is the cost of that? Well, you guys are seeing it down towards 1122 today and still getting hit hard here and just on a complete downturn here. If you think about it, this is coming down back towards those $10 lows. Will that even hold? And that's a May low. Now we're just going to keep watch to see if it gets taken out. If it does go back below that $10, I'm going to be looking to probably take a little bit of a shot here in DraftKings, but I don't have it right now. I have traded this in the past, and I traded it when it was in this 1380 up there towards 17. We'll see what happens now on this big pullback. All right, catching up with the chat. What's going on out there? Zen Bullish Draft Deuces. Yeah, it definitely gave some deuces there for sure. Beach Bum, how's it going out there? Crassy. What's going on? What are you guys taking a look at today? Hit the thumbs up if you guys are enjoying today's show. Let's keep going, and then we'll get into what was hot and what was not in just about 5 to 8 minutes. But let's keep going. I got about 3 more to get to. All right, let's go to the next one. Next one's going to be DoorDash. The Dash. All right, let me know in the chat if you guys have used DoorDash in this month. I know I haven't used it this month, but of course I probably use one of them, at least either Uber Eats or Grubhub. So I'm going to keep watch to see what happens here on DoorDash. It did try to get through 55 today. Just couldn't do it right there. Let's look at the 15-minute. You guys can see that more and more. Could not get through the 55 level there, but they came in at a loss on the EPS of 77 cents, missing the loss of 60-cent estimate. Sales at 1.7 billion, beating the 1.63 billion estimate, but also cash is king, right? You can see here the company's still losing money. Now, it did get a pop off of this, which was surprising. So keep in mind that we'll see what happens on DoorDash, but I don't know. I don't know if I can trust this turnaround. And this company, ever since it IPO'd right before 2021, has just been on a downturn. And until things turn around, I can count myself right out the door, dashing out. All right, let's keep going. Let's go to Funko. Who has a Funko? Who has some kids out there that like some Funko action? Well, it looks like Funko did not like that news today. Look at the last 3 days. It's in its own little bear market, down 60% in the last 3 days. EPS coming in here, missing the 50-cent estimate, coming in at 20 cents. Sales at 365.6 million, beating the 320.63 million estimate. This was on Funko, definitely missing big on that EPS. Down to $8. We'll have to wait and see if they can bounce. Right now, it's just been on bid down right now. I would not look to see if this can change tune until it really kind of gets out of this trend line on the 15-minute. Right now, it just keeps coming down. And this is why it's important also to have some ability to trade at, like, let's say like 4 a.m., 5 a.m. because if you would have been able to see those earnings report and you were a longer investor, you might have been able to sneak out at kind of like 12.95s, $12 versus waiting for the market open and then getting caught around the $10 price point. So this is the importance of having tools, and being able to trade in the pre-market hours is so important. I always look for that feature in brokers. And if you can't, well, you might just get stuck holding until the market open. And by that time, you could be getting hit harder. All right, let's go to one last one, which is Cinemark holding. Let's go take a look into the movie theaters. Who's been in the movie theaters in the last month? I'm going to take a look at what you guys said about Funko, but let's take a look here. All right, silver and gold, silver and gold. Everyone wants silver and gold. Funko, what happened? Well, they don't like the toys, I guess. They definitely don't like it. All right, taking a look there. What else here? Still short Tesla. Woo, Crassy. Taking a short on Tesla. You're brave, man. All right, CNK here. Cinemark Holdings getting some lift today on their earnings. But let's talk about what they got. Really was a pretty good beat on the EPS. Let's talk about it here. EPS coming in at a loss of 20 cents versus the loss of 65 cents last year. Sales at 650.4 million, beating the 616.87 million estimate. So not too bad there. Pretty decent numbers getting back here, getting some lift. CNK. Will this kind of affect AMC? It could. But as you guys can see, we're also very near those pandemic lows. So just seems to be bouncing off the floor here. Could give AMC a little bit of lift, but as you guys can see, it's actually gone down on the day. So just be careful there. CNK definitely not affecting AMC today. And it's trying to get through that 12. We'll see if it's able to close above that 12 later today. All right, getting out of Cinemark, let's go towards what was hot and what was not. Hit the like button if you guys are enjoying today's show. Looks like we got 119 traders here. Let's see if we can get to 75 likes today. I'm putting out a little call to action for you guys. Smash it up for me. Let's keep going towards the next stocks. All right, we're going to go into what was hot and what was not. I'll even show you guys what trade I did today and got cut out of eventually, but took a lot of profit into the move. So let's talk about what was hot and what was not today. All right, let's get into those big movers today. We're going to take a look at what's leading. What's leading is actually basic materials, followed by financial services, and then communication services. But really, in the green, basic materials are deep into the green. Copper having a really good day. FCX, SCCO. You guys know I've been talking about this one, the copper play, for a while now. We've been actually pointing this out since. Looks like we created it on the 21st of October. And look how this is starting to really run. Hope somebody was able to catch that big push. That's not a bad, almost 10% day there. SCCO, FCX also getting that push there. Freeport, McMoran, not a bad move there. HBM, not one that I watch often, but definitely getting a little bit of a lift in copper today. Aluminum, AA, getting a little bit of a push out. Gold, I love gold. Industrial metals, not having a bad day in certain ones here. Look at BHP, Rio getting some lift here. So keep these on watch. Vale getting started a little bit. We'll see if these can continue pushing on the day. MP up 9%. So look for eventually lithium names to get strong. They don't even need to be strong today. But you guys can see here, nice little push there in lithium Americas today. LTHM, another one to keep in watch. We'll see what happens to these. Maybe PLL. Keeping my close eye on these. Will they eventually get a rip up? Have to wait and see. All right, coal's another area that's been doing well today. BTU trying to get through 2750. We were talking about the 25 earlier in the week. We got through there and really got to push up. Now we just want to see if it gets to 2750, and then you really have a good look in coal for a breakout. All right, let's get to my trade on the day where I, made a good one, but also got out of the trade before it started turning on me. So I went into Amazon on this push back above the 90s, was able to take some profit, right, into the 90.50, then taking it into 91s, eventually taking some even at 92. But I left a little bit of a runner on looking for that kind of swing trade material. And what did I have to do? Well, I had to cut it down here towards the 89.60s as it started to break down. And why did I do that? Well, the SPY started to break down and not holding that 379.80 area as the 1 hour support. Once we broke through there, I realized, do I really want to stay in the trade, overstay my trade, and overstay my welcome? No, I did not. So I took the money and ran for the hills. And this is that type of market that it was, right? I mean, selling some at 91.06, 91.85s, and finally getting out the rest of it at 89.60s. Not a bad way to play it up, and was able to make some good money today on Amazon. But when the trade doesn't hold, so do we. We get the hell out. All right, let's get towards the other stocks that are doing well. Let's go to the stocks that are not doing well, which is technology, really. Let's talk about what is down big. Well, Apple's down big. It's down 5.1% from the open. And I've talked about this in Apple. Now you're down from Tuesday, kind of the high on Tuesday's price to where we're at now. You're down almost 13% in Apple. Not a good outlook. That's not going to help the market. And especially also when Microsoft is essentially into the red from the open. These stocks were already beaten down in the pre-market, so they get a little bit of a bounce today. But overall, from the open, still in the red. And I think that's an important outlook there to keep in mind. And we'll see what happens here. But it doesn't look good here for our leadership. NVIDIA. This is the stock that we need to see kind of get really above the 150s to get out of this range. And it's been working its way. But will it be able to even get towards the 150 is something to keep in mind. CRM turned back around to the dark side, and I'll call it the dark side because it's going straight down. Look at this, acting as resistance. It tried to get over this resistance, really held it 3 touches, boom, right back to the downside. And it looks like you might get a new 52-week low in CRM. So just goes to show us that even in names like CRM that are B2B, they're still getting hit here on the downside. All right, catching up with the chat. What's going on out there? MD, how we doing out there? All right, taking a look there. Jet, what's going on, guys? Carvana down to the 8s. That's how it is. Hit the like, guys. Appreciate you guys. All right, let me know what you guys are taking a look at. Missed that entry on the old friend WPM. Ooh, that's not a bad one there. Not a bad little move. How do you feel about the MJ sector in the midterms coming up, says Hodo Strategies. All right. Well, one thing that I would say about cannabis is that I do think that eventually you're going to at least get banking. Banking is going to be a big move, right? If we could at least just get that and the expungement to go through, that's the bill that Schumer has been talking about lately. That can be a move already. And what will that kind of affect? I'm not even going to give you cannabis stocks to the upside. I'm actually going to be pointing to you on IIPR, and it's already come down massively. So it's kind of a hard one to tell you guys, but this will tell you how much I've been watching this company. I created this little line. I updated it in November 19th towards 21, was watching this, and I could see IIPR really top out. Innovative Industrial Properties, what do? They actually lend to cannabis companies real estate, right? Why do they lend to companies real estate? Well, because they can't get loans from the bank, right? They can't just go to JPM and be like, well, we want to open a new dispensary. Can you guys give us the loan? So this is a company that I could see getting hit to the downside with that bank being mentioned. But there's also going to be some lifts in certain areas because now you'll start being able to actually go to banking to get the loaning that you need. Now, one thing that I would be watching for in these cannabis stocks, is it going to be like a CGC? Is it going to be like a Tilray? Well, to tell you the truth, I feel like these companies have too much debt on the table to really get going. So I'm going to actually be looking for more OTC stocks to move from OTC stocks to on the market exchange. Those are the stocks that I think are going to have the biggest opportunities. So that's why I always talk about MSOS. My man Spencer would be proud of me. Looking at this company can give you exposures even into OTC stocks, which I think are definitely important to be a part of if you're a believer in the cannabis industry. And maybe it's not even just in cannabis. You just think that the industry overall eventually gets going and there's some money to be made there. All right, let's go to what other stocks were not hot today. We could take a look at some other areas here. Consumer cyclical is definitely an area to keep watch. There's mixed signals here. It's deep into the red, but that's from the open. Overall, it's still in the green. Why is it still in the green? Because there's some stocks that are having a good day today. Crocs having another day up. This shows us there that the footwear and accessories are not all in the red, right? Nike even bouncing off of this. Nike gave us that downside outlook in China, but look how Nike's been doing since the earnings. Well, you can see here, what did it do? It filled that gap right there. It came right back to it. Now, on the long run, we need to see if this is going to get our move towards 100 or a turnaround to the downside, but definitely showing us that it could come back and fill that gap. The Spence ETF. Yes, it would be good to have one. All right. It's good to see you, Rich. All right. Let's see what other stocks we could take a look at. Consumer cyclical. What's on the downside there? Well, gambling stocks turning right back to the downside. And a lot of that being driven down by the leader here, DraftKings, with a hard move to the downside. Not what I wanted to see, because even myself was looking at my genie like, man, I'm getting back. I'm getting back. Well, it doesn't look like I'm getting back anytime soon, team. But you guys know it. Still holding the bag in this one. This is one that I put away. It's in the long-term account. I'll do like Dennis. It's in the wife's account. Just messing there. But let's keep going. Let's take a look at what other stocks are making moves. Healthcare pulling back today. Another healthcare kind of pullback move. Of course, these healthcare plans have been just completely ripping. So a pullback, kind of expected, right? Now the question is, will they catch their 9 EMA and continue making moves? That's what I would be paying attention to kind of catch that move. That's Cigna here off of 318. That's you're looking at ELV trying to recover 530, UNH trying to recover 540s. But right now, these do look like they're breaking down and they're pulling around. So you got to be careful. Rotation. So important to rotate with the market. Financial services continuing in the lead. I wanted to keep watch to see how JPM would do today, how Bank of America would do today. Not a bad move on Bank of America today. Did make that move up towards 37, pulled back. Now we'll just have to see where we close on the day. Genie out of all wishes. Thank you, Zen. Not even one wish, please? No, I'm just playing. Yeah, it's been tough. The big thing with Genie is there's a lot of kind of short reports, outlooks that they're spending too much money to acquire their licenses for sports. It's something to keep watch, right? I think in the long run, it could still get it together. They still got some good technology. But Sports Radar hasn't been doing bad, and I've had them on the show multiple times. I'm about to reach it back out to Sports Radar a little bit and see what they think about what's going on between the battles between their major competitor and Genie. All right, let's get towards some other stocks in the market. Of course, energy also pulling back today. If you take a look at XOM, Oxy, these stocks pulling back today. ConocoPhillips was doing really good. Now look at that big pullback right back down, even though they gave a huge kind of candle out yesterday, pulling right back down. So we got to be careful, especially when oil comes down. It seems like the market's been dragging there. Let's take a look at the market overall. Looks like we're just going sideways here at 371. Will we eventually take that next leg lower towards 369? All right, let's keep going towards different stocks out there. If you guys have something to watch, throw it up in the chat. I'll definitely do a little bit of a deep dive. Does Apple go to 100? I won't be mad at it if it does, especially if it can get under 100. That's what I would be watching for in Apple. All right, going to take a look at what other stocks are making moves on the day. Let's go to the SPY overall. Let's take a look at what was up today and what was down big. And so down big, we'd look at Warner Brothers Discovery, and they had their earnings. It did not come in great here. EPS at a loss of 95 cents, missing the loss of 21-cent estimate. Things don't look good for Warner Brothers Discovery. Even though I thought that they had the right mix of content, it does not look like it's showing up in the numbers. Sales at $9.82 billion, missing the $10.36 billion estimate. Warner Brothers Discovery taking another leg down through that 1350 resistance that we talked about. If we could get a close to 14, I was going to feel nice. Couldn't even get that. Right back down to new lows there. And when stocks make new lows, what is our saying, team? We got to go. Warner Brothers didn't even warn. All right, we'll see what else is going on. Can Discovery get their game together with HBO? I've been seeing Discovery content move slowly but surely into the HBO kind of family. And so they're trying to figure out what's the right mix. Is it two services? Is it one combined? I think in the long run, what you're going to see is a combined forces here where Discovery and HBO probably even go into one streaming service because they're realizing that it doesn't make sense to have it separate. I think by their attempt right now to get some of Discovery's content into HBO Max just shows me more and more that they want to lean towards getting the viewers into both subscriptions. So we'll just have to wait and see if they maybe make one that's an overall subscription together, maybe a bundle like Disney does. This is what I think is the best move for them probably. Maybe it's just including an option where you can get Discovery and HBO Max if you like add like maybe $2 or $3, because I know Discovery isn't that much. It's only like $7 right now or $5. So does not make sense for me in this case to not bundle them together. But this is a story that I don't understand why they can't turn things around. All right, we'll see what else is going on. If you guys have ever watched Discovery or HBO, please let me know because I'm in the same camp that they need to figure this out. All right, let's keep going. We'll take a look at some other stocks. Let's go to what was doing well today. All right, well, we can take a look. FCX, gold in there. Starbucks, one of the leading up moves. S-Day Lauder after the S-Day Slaughter Day where it came down to 192, getting the bounce back towards 218 today. And then I could take a look, and there's not much after that. MGM getting a little bit of a bounce back, but it just shows me that not as strong as a day as I expected. Now, one stock that is starting to get stronger is Moderna. This is one that I definitely would keep on watch. After this day, it seems like it just wants to keep holding and pushing towards the next level. And now you're starting to get above the 200-day moving average. And we've seen how healthcare has been strong. Will this take another leg up and then start driving with some of the biotech stocks? We'll have to wait and see. AMAT having a good day. Win continuing. This is one that I'm going to keep watch. Of course, this has to do with the demand and the outlook in China. But if they can keep it going, well, then it could take that next leg to 74. If this thing turns around, I think we're right back down towards the 60. So I'm going to be watching this one. I did make money this week, even shorting this stock. So who knows? Maybe I'm able to find it on the downside on the next kind of wing down. We'll have to wait if it can start breaking. 200-day is acting like a little bit as resistance. Doesn't really want to close towards 70. So I'd keep my eye on if it can close towards 70. Still going to be looking bullish. But we start breaking back towards 67. This could break down. Winning, that's the only way. Let's take a look. All right, I'm going to take a look at crude. Crude is at 92.23. Just shows me what we've been talking about in OPEC plus talk. We've talked about this for a while. Would OPEC's move of cutting the production eventually get it to the price that they were intending, which was $90 a barrel, right? Because that makes sense for what? These oil companies to continue pumping out the barrels and making as much money as they possibly can right now. So it seems to me that OPEC's plus is mentality and cutting the production got the prices to oil where they wanted it, right? Which was above the 90 mark. Now I think we need to keep watch. Will oil stay between 90 and 100, or will it get above 100? Because once it starts getting above that 100, we start getting into a little bit more of that demand destruction, because it's going to get to a certain price where even it'll start showing up, here in the US at the gas pumps. And then we could start seeing a little bit of demand destruction. But for right now, oil prices are ripping up above 92 today on the front month on WTI. So even with this pullback in ExxonMobil, it could catch the lift and continue going. I know that's kind of hard to think, but man, the drive in ExxonMobil in October, just look at the monthly chart here, guys. Look at this monthly chart. Look at that takeoff that happened. This is why I also like using monthly charts, because if we think about it, look at how this really truly acted as support for so long here. And we could have been using around the 85 level as entries and looking for exits going towards the 97, 98 area. Eventually it did break out above the 100, but just goes to show me how important it is, especially when you're getting those pullbacks and you just don't understand how the stock's building up. Looking at those deeper time frames can definitely help us. We'll see what happens in the oil game, in energy. Of course, it's going to be a truly interesting perspective to keep watch. If energy can keep pushing, oil is pushing right now to 92s. We'll see if it gets towards 93s. I mean, for a while, I feel like if OPEC didn't jump in there and do those production cuts, it looked like oil was heading to 60s. Now we'll see if we find some stability. Will we find stability between 90 and 100, or will it go above that 100? I have to wait and see. All right, let's get out of the oil talk. Let's get to our interview today. Like always, that's what it's all about here at Benzinga. I can point to over here or over there where the flags are, but there's nothing better than getting to the expert opinions. So excited to get into our interview today. We got Brian Seay, CFA, founding partner at the Capital Stewards. Let's get going. Hit the alarm, sound it, hit those likes. Let's get into our interview today. All right, Brian, how we doing? Welcome back to the show.
Hey, Mitch, glad to be back. Thanks for having me back on. Looking forward to this conversation.
Exciting times right now, and maybe you can talk some sense into me today, because it seems like today was one of those days where I got mixed signals, I think, from the stats and the data that came out. So we'll talk a little bit about that. Let's kick it off first. What were your key takeaways from the FOMC meeting?
Yeah, so I think my key takeaways first, the Fed continues to raise interest rates. I think that's not surprising. We've long been in the camp that the Fed's going to need to raise rates above the level of core inflation. So remember, when we're talking about inflation, there's two areas that we look at. One is the headline number, which is above 8% that we hear talked about a lot. And then the other is core inflation, which pulls out food and energy, which we know are super volatile, right? And when we look back historically, we've seen that in periods of really high inflation, the Fed has to raise rates above the core inflation level in order for inflation to get stamped out. And so it's no surprise to us that Jay Powell hinted at that yesterday. Sort of said, hey, yes, we're not going to continue hiking the 75 basis points from now until eternity. Obviously, that doesn't make sense. We'll slow down the pace of that. But we're probably going to have to hike rates above the level of core inflation into the 5% range, maybe a little bit more, in order to slow down inflation. So what I thought he said, what he should have said, I think my takeaway was that's sort of what we've been expecting. That's what he's been forecasting. I think the market so wants to move forward, right? And say, hey, we're past all the pain that we've had this year, wants to move into 2023. And so it keeps kind of getting ahead of itself a little bit right before these Fed meetings, looking for a pivot or looking for something like that. And the reality is this is going to be a long, slow grind to get back to good. There's not going to be this sort of moment in time that happens where everything just all of a sudden, springs forward and looks great again. So I think those are kind of a couple of my takeaways.
Yeah, definitely. I think that's an important outlook there. And I think you might not be the only one speaking about it, but not the one that I would have to point to that is in the camp of let's talk about, where the benchmark is going by just taking a guess at where it's going, but actually using some historical data there. I think that's an important outlook that you got there, Brian, especially with the core outlook. A lot of people were looking at the benchmark at 4, 3, but this seems to make sense to me now. Core at 5, if we could get the benchmark to 5, then we could actually start affecting the core rate. Then we can truly see inflation come down. Seems to make sense there. Let's go towards unemployment today. It came in a little bit higher at 3.7 versus the prior reading of 3.5. Is this what we need to say that the Fed is truly doing their job?
Yeah, so I think it's really important for folks to understand that higher unemployment is a feature of the Fed raising interest rates and slowing down the economy. It's not a bug, right? There's no scenario that happens where we raise interest rates and we slow down the economy and unemployment doesn't change. One of the key drivers of inflation right now is the really tight labor market. And so if the labor market doesn't weaken, then inflation is not going to slow down. So, we're not talking about 2020 or 2008 sort of deep unemployment level recessions where you see unemployment up 7, 8, 9, 10%. We're not talking about something like that. We saw slightly higher unemployment this morning, but there's still a lot more room to go here as well. We talk about this idea of this sort of long, slow grind going forward. The economy created 260,000 jobs in October. That's down, right, from prints that were more than 500,000 earlier this year. In the first quarter, we had several months in a row where we were north of 300,000. So the number is moving down. It's moving lower, but that's still, if you think about the long-term job creation that happens in our economy, it's around 175,000 jobs a month. That's what we need to sort of sustain population growth and all those kinds of things. And so we're still creating a lot more jobs than we need. That creates a tight labor market. That drives inflation, and that's what the Fed is trying to slow down by raising interest rates.
Yeah, that's one area where I feel like I got it wrong today. Sometimes you're going to get it wrong. And one thing that I was seeing is, do we first have to kind of fill these job openings to truly get the unemployment where we want to see it, right? The rising rate going up there towards maybe, let's say, 4%. Do we have to first fill in those job openings?
I think you do have to fill in the job openings, or maybe more correctly, some of the job openings just disappear, right? We've seen companies announcing layoffs. Twitter has been in the news today. A lot of the tech companies over the last couple of weeks have done that, right? So you're starting to see that filter down through the economy, and that will move from, venture cap backed companies to technology companies to more Main Street companies as we go forward from here. So it's not so much that we have to fill all of the available jobs. I think some of them get filled. But I think a lot of what happens is some of the job growth gets eliminated because companies don't borrow and expand as fast because rates are a lot higher. And then secondarily, some of these folks get laid off from, places like Twitter or, other technology ventures, and then they go take jobs in other sectors of the economy that are hiring. So that kind of the combination of those two activities helps the labor market get back in balance.
Yeah, it does. It does. And it's a confusing one, right? Because we're in a different environment where it doesn't seem to kind of make sense for what we're going through. A lot of times when we're going through these high inflationary times, there isn't the job openings, right? And so this is a very unprecedented time to try to figure out this hard task here. Now let's go towards the bull case. What truly has to happen for the bull case to kind of take the narrative?
Yeah. So I think in order for the market to turn around and to have a longer term bull market, there's a couple of things really that need to happen. So the first is rates have to finish rising. We think that's somewhere north of 5%. And then second, earnings still need to adjust. We have not seen earnings come down, expectations of earnings changed that much. And they certainly haven't gone negative. this quarter. So we're in the middle of earnings season, right? You're seeing companies announce earnings. 70% of companies have beaten earnings expectations. The bar has moved lower, certainly from like 11% in July now down to a little bit over 2%. So companies are still beating expectations. Expectations for growth are still positive. Growth is still positive. What the Fed is trying to engineer, again, is a slowing economy that's going to lead to earnings declines, right? And so I think you've got to see earnings decline, go lower. The combination of those two things should move the valuation multiples. Or when you think about stocks, right, you look at PE ratios, you can look at PE ratios on the market. Right now, the market's trading somewhere around 15 times future earnings. That's very average, right? It's not a bad place to enter the market. You would expect average returns going over long periods of time, right? Not over short periods of time. You expect average returns over long periods of time if you buy at a 15 multiple. But probably to set up a longer term bull market and something that is more enduring, you're going to need to see that multiple get down to 13 or 14, get to below average, and then that's where things can sort of gather and we can kind of put all this behind us and move forward. And that's probably a story for next year, and not something that's going to happen between now and December.
Well, of course, now is getting towards the time, towards that end of the year where investors need to start making decisions. So what do you expect really starting to happen from investors?
Yeah, so there's a couple things. I always tell people to be cautious about trading around year end because there's a lot of what I call uneconomic decisions that start happening, right? People have tax issues. They need to rebalance. They need to just do things in their financial lives. And so they may be making trades that aren't, and the market may be reflecting things that aren't about overall earnings or the health of the economy or things like that. So just always kind of keep that in mind as we get into the end of the year. For folks that are moving towards the end of the year, it's important to rebalance, right? So if you're, even if you're trading in the stock market, if you've got less exposure now than you had earlier in the year because stocks are down, it's important to be making sure that you're truing that up and starting to put cash back in the market. Nobody knows where the market bottom is going to be. I was at a conference this week with a lot of really smart investment people. No one in that room can tell you exactly where the market's going to bottom. So it's important to start rebalancing back in so that when the new kind of phase happens, you're prepared for that. And then secondly, I think there's this misnomer out there that a lot of folks don't get that, if I don't sell a loser, then, I haven't really lost. It's only a paper loss. And if you're investing in a taxable account, an account where you're paying taxes, so not in an IRA or not in a 401k, but in a sort of a standard brokerage account or something like that, you want to sell your losers and harvest those losses, and then you can use those losses this year to offset future gains. So it's important to think about that kind of stuff as you go towards year end, what your income is, all those sorts of things. And so just think more broadly about your entire financial situation as you get into the end of the year, and maybe less so on particular investments.
Definitely think it's getting towards that time. And I've been thinking about the same thing, would we see some more tax loss harvesting, especially because it's been that type of year, right? In a bear market, that's probably when you're going to see some more losses being stuck into portfolios. So it's something to keep in mind. Now, of course, the big earnings reports have just not been what we've wanted to see. Is this what you expect going into the end of the earnings season, or do you kind of think that we'll start kind of raising the wall of the worry here?
I expect earnings to be sort of what they've been, which is that companies are growing really modestly, 2.5%, something like that. That's what expectations are. It's really important too for folks. Companies almost always beat earnings, right? And they guide so that the analyst community expects basically the earnings that they're going to provide. So it's more than 2/3 of companies in all periods of time beat earnings. What's important to look at is what's actually happening to earnings growth rates over time. And what we've seen since July is that the earnings growth rates have come down pretty materially. And that's what we expect. Rising interest rates, slowing economy, growth slows down. So I don't expect the rest of the earnings season to be different than what we've seen so far. Just a lot of slow growth. What we haven't seen a lot this earnings season is commentary, forward-looking guidance into 2023. Companies have mostly just said, hey, it's going to be a challenging year. We'll talk more about it in January. And so I think when we get the Q4 numbers in the February timeframe, and companies have to provide guidance for the remainder of the year. I think you'll see more negative commentary on the outlook for next year. Corporate CEO optimism is at some of the lowest levels that it's ever been. And when it's down this low, there's almost always a recession. Earnings almost always decline. Again, not every time, but almost always, right? Majority of the time that happens. So you've got to expect that guidance is gonna go lower, and that expectations are going to continue to go down. And if they go down from here, that's going to mean earnings, go negative into the first part of next year.
So the last thing I'd leave off on is opportunities, right? Where do you feel the opportunities truly are in this market right now? Is it more GARP plays? Is it growth? Is it value? Seems to me like value has been coming a little bit more into play here, but what are you seeing?
Yeah, so I continue to think being defensive makes a lot of sense. So in the stock space, that is, quote unquote value, right? It's old line companies. It's companies that have good positive profitability now. We're not waiting 5 or 6 or 10 years to get that profitability, and that minimizes the impact of rising rates, because rates are going to continue to rise, right? So it's staying value oriented. And then in the fixed income space, in the bond market, for folks that are involved there, it's continuing to be in shorter duration securities, right? Duration, just a fancy finance word for time and maturity, right? So that means owning 2, 3, 4 year bonds instead of 6, 7, 8, 9, 10 year bonds. So those are the kinds of things that I think are important in a market like this.
Well, thank you for joining me like always, Brian. We'll definitely have you back on, and appreciate you talking about all different types of topics, whether it be from the Fed to growth outlooks or maybe value plays right now making more sense. Appreciate you like always, Brian.
Sure. Happy to do it, Mitch.
Have a good one. All right. That's going to do it for us today. I hope you guys enjoyed that conversation. I definitely enjoyed talking to Brian. As you guys can see, we could probably have a 2-hour-long discussion on just the market, but hit the thumbs up if you guys appreciated us getting towards the experts, and of course keeping the informational edge in your favor. That's what it's all about here at Benzinga, is trying to get towards the perspective and truly giving the floor to these experts so that they can go ahead and give you what they're seeing in the markets, whether it be, a bullish side or a bearish side. One thing we don't shy away from on Benzinga is giving you the perspective. So I hope you guys enjoyed Stock Market Movers this week. We're going to keep battling here. If you guys enjoy this show, let me know. Hit the comments after the show. Let me know, hey, I like the aspect of bringing the experts, or maybe I like the sector and industry analysis, and I would want to see more of why it's important to rotate into certain sectors and industries. Well, let me know, because I'll tell you what, I'm always trying to make improvements to this show, and you guys call the shots also. So I'll see you next time, team, and stay tuned. We still got one more show left for you this week. We got At the Close coming at 3:30. Don't miss it. Joel Elconin. We'll see what he thought of today's market move. And of course, we'll check all the biggest movers in At the Close. And of course, we'll see if the SPY can catch a rally, because it's just on the slow leak. Sideways action since pretty much we started the show. Really hasn't gone anywhere. We'll see if that turns around. Hit the thumbs up on your way out.